So you're probably here right now because you want to make some money by day trading, and I've got you. So welcome to day one of Eric's day trading bootcamp. Let's go. In this bootcamp, I'm gonna take you from a beginner or unprofitable day trader who probably is a little bit confused about trading, has psychology issues, maybe no strategy, or is consistently blowing accounts, and turn you into a well-educated trader. So you're gonna learn A to Z on how to become a profitable futures day trader, as well as learn my own 1 hour strategy and learn how to create your own strategy or verify existing strategies that work. And you're also going to learn exactly how to make $10,000 a month and teach you professional risk management so you aren't risking insane amounts of money. Why exactly did I create this bootcamp and make it completely free? When I was first learning trading, I learned online like pretty much everyone else. And I noticed that those gurus online were teaching the wrong and vague information about trading. And honestly, it made me really confused, and I felt like I was scattering all over the place and didn't know really who to trust. So my goal with this bootcamp is so that you can avoid scams, wasting time, learning the right things and avoiding bad information, as well as not losing money from trading. Because when I first started, I was learning the wrong information, so that led me to losing money in the markets, and it was not good. So I wish I had one playlist with all the knowledge for completely free, and so I didn't have to go around online on YouTube scrolling and looking for the correct videos and channels to watch. I also forgot to mention, tell me why people on YouTube and online are teaching when they don't even have a single payout and they're trying to teach other people trading. It doesn't make sense. It's kind of like the blind leading the blind. So for me, and I hope for you as well, you'd want to follow someone who's actually able to make money from trading so that their advice they're giving you is actually valid. I'm gonna pack absolutely everything I know about trading into this bootcamp. And this knowledge that I'm giving you is gonna be able to have the power to change your life. Essentially what I'm doing is giving you a map completely for free. I'm not charging anything, all for free on YouTube, and it's up to you to take action. I can't force you to do anything, and it's really up to you to take this knowledge that I'm giving you and drive the car to the destination, and in this case, making money. So with day one of the bootcamp, today we're gonna keep it simple. First, I'm gonna explain why I'm doing this bootcamp and who exactly I am. And then we're gonna go into expectations of this bootcamp as well as the proper long-term mindset for trading. And then after that, we're gonna go through the basics of trading and finally end off with homework. If you guys don't already know, my name is Eric. I grew up in the US in a very Asian household, and I was taught that studying 24/7 academics was pretty much the only path to a good life. And later, I kind of realized that was kind of false. So my first job I got was for $12 an hour. And you can see in this paycheck, I think it was like $170, which should be around maybe like 15 hours of work. But honestly, after all that time working, it was manual labor as well. It just didn't feel satisfying or felt like I wasn't being compensated for the amount of work I was putting in. And so around 2019, 2021, I had some personal struggles with my family at home. My dad got a little bit sick, but later when I traveled outside of the US, I noticed that young people had lifestyles and lived in a way that I didn't think was possible. And people had freedom and lived how they wanted to. The type of person that I am is that if I put work into something, I don't want that work to kind of go to waste or be for something that's not very impactful. I want my work to actually have a change. So this led me to trading in around 2021. I took an economics class, and they basically had a stock market competition for an entire class with fake money. And the person that would get first place would essentially get like an A on their final. And I'm a pretty competitive person, so I really wanted to get first place, but I didn't know anything about trading or the stock market at the time. So I started spending a lot of free time learning, online YouTube books, that kind of thing. And at the time, I was using like a strategy where I was short, bad companies that would suddenly go up, and then hope to catch the crash after. And I think in the end, I was actually able to get like second place. So unfortunately, I did not get that free A. I turned like 100K into around 300K. And I mean, for second place, they just gave me like a candy bar, but that's still pretty awesome. And I figured out just by pressing buttons on a screen, I was essentially able to print money out of thin air. But unfortunately, this strategy I was using would not work on the actual markets. So I started looking for other ways to learn trading. And for the next couple of years, I kind of locked in and started learning trading the professional way and the way that a lot of full-time people do it. And finally, in 2023, I became consistently profitable. So you can see in 2021, I started that live account and lost money. 2023, got my first payout and started scaling up. And finally, in 2024, I got my first $20,000 month. And now, jumping to today, 2026, I have around 5 years of experience trading in the markets now, and I've been profitable for around the last 3 years. And for me, 5-figure months are pretty typical, so around 10 to 25K a month. And I've taught over 20 students to payouts. So on the right, you can see my typical profit for the day, as well as payouts from a variety of firms. And you can see one of them actually even sent me a hat, which is pretty cool. And here's kind of what a typical month might look like. Usually it's not all green. This is just a month that happened to be green for every single day, but I do take losses. But you can see it was around $13,000 for this month. And outside of trading, I'm studying data science at Penn State. I have a background in coding. I've always enjoyed programming ever since I was very young. And I also have a client business internship at BlackRock. And I enjoy pickleball, food, and video games. I do go to school and do work. I believe there's value in both, which is why I do it. This brings me to my next point, which is why do you personally want to learn trading? This is very important because while you're learning trading, or even just in the process of trading, you might run into some struggles, like maybe a loss streak. And knowing that why and that reason why you're actually doing trading is going to keep you in the game and keep you consistently showing up every single day. So I think for a lot of other influencers and gurus online, they promote trading as a way to escape jobs or school, which I think is definitely valid. But I think also as well for me, trading is a way for me to build leverage and build capital early that I can put into other businesses, as well as just have more options in life. So that's kind of my why. I want you guys to pause for a little bit and think about your why for learning trading and write it down. Now, let's see how this whole boot camp will actually play out. So by the time you're watching this, most of the videos will probably be out for the boot camp. So first month, you should spend completing the boot camp in its entirety. So watching all the videos and learning everything you can. From months 2 to 4, you're going to want to pick a strategy, backtest, and paper trade that strategy. And while you're paper trading, journal all those trades. And in the 5th month, you're going to want to either start a funded account challenge or a small live account. And you'll learn what those are later. But essentially, after we've verified a strategy works and you have the experience, then we actually want to start making money with it. And then in the 6th month, you're going to see your first payout in profits and hopefully get that money flowing into your bank. And you can use that money to reinvest back into your trading or invest for more wealth. Don't worry about all this for now. Entire bootcamp is going to cover this entire process and how to go about it. Now, for some of the expectations you should have while you're learning trading, first, trading is not a get rich quick scheme. It's not going to instantly make you rich in like a week or even a month. Like you're just not suddenly going to wake up tomorrow and make millions overnight. But if you stay consistent and learn throughout maybe a year, you're going to learn how to make consistent income with a low amount of risk. And potentially by the end of the year, you're probably going to be able to make a few thousand to even $50,000 a month. That's very realistic from knowing nothing today. But, this takes hard work. And a lot of people will say maybe like $5,000 or $10,000 a month is not a lot of money. But I think getting to that point within a year, that is kind of get rich quick. But it's not in the sense of where you're just going to suddenly be printing millions. It's a process that takes time. The next point is that 90% of people fail at trading. And there's a reason for this. This is due to poor education, bad risk management, a lot of people that just simply gamble, and people who are just not consistent, and finally just have no discipline and just press random buttons. I think the majority are probably because of poor education. They're not learning the right things. They don't know the proper tools. And then second, it's probably lack of consistency. So I want you guys to look at the first video of this bootcamp, the one you're watching right now, and compare it to the later few videos of the bootcamp. You'll probably notice the views start to dwindle down. And that kind of shows you that people aren't fully learning what they're supposed to learn and probably not applying everything they're supposed to. And because they're missing information and missing knowledge, that ties back to poor education. They're simply not doing trading correctly and are gonna end up losing money and become part of that 90%. So just from looking at that should already tell you a lot about the people that are trying to learn trading. And really that just ties into what a lot of people and that are in that 90% end up, is because they're just not consistent and don't have proper discipline. I'm giving you guys the right education. So really it's up to you guys. And if you aren't getting all the information that you're supposed to have and applying all the steps that I'm telling you guys to do, right, then that's just going to lead you to that 90%. So without the proper information, this is like trying to win, I don't know, like a basketball tournament when you don't even know how to dribble the ball. I mean, there's just no way you can expect to win if you don't even have the basics down. I also wanted to add that I've basically never seen anyone who just suddenly got really good at trading like in one day. And if they do have like that insane like lottery winning play where they make thousands in a second, and that's not what they usually do. Usually within the next week or so they lose it all because, right, they don't have the actual skill to trade and maintain it. So when you're learning, don't bet on one huge win coming to save you. Really, it's about being consistent, having that skill to trade properly and make consistent money. And I'm including a lot of information that is essential for your trading. I don't want to waste your guys' time. So if you're just skipping around and going around different videos, this is going to hurt you in the long run. If you're serious, I want you guys to lock in and take notes on these videos that I'm giving to you for completely free, and fully watch the videos so you're not missing out on important information. There could be one little thing that I say that is actually very important, and because you miss out on it, that could, drastically change the progression of how you trade. But if you guys are actually locked in, I really want to help those people who want to put in the work in and are actually going to apply what I'm going to say. So that's really who this bootcamp is for. People who are going to take action and actually want to do things so they can get really good at trading. So let's do this and start. I'm going to show you guys some myths that are pretty common. A lot of people think that you need prior finance or like super advanced math knowledge, but you don't need either. Trading is actually like very simple. It's really just seeing price of something go up and down. The second is that you will lose money. Now, this is actually true. You're going to lose money trading, but you're going to want to be comfortable in risk, and any amount of money that's losing, right? When we start off, we're not going to start risking real money because that's just stupid. If you don't know what you're doing and you put real money on the line, I mean, you're just asking to lose it. We're going to make sure you practice trading on a demo account. So with fake money, make sure you are profitable on that, and then make sure that you have an actual strategy that is backed with data. And then from there, it makes sense to take those risks because you have an advantage. And we have trading having a low success rate. Now, this is true because 90% of day traders do lose, but I want to put something into perspective. If you want to become a doctor or maybe like a pro NBA player or sports player in the NFL, if you want to go through that, you have to be the best of the best. You have to go to school maybe 10-15 years, and then you have to work, and even then that's so much time, and you have to apply for the schools. There's just so many filters. And if you want to be like an NBA player, right, you have to be the top in your high school, top in your college, And then even out of those, maybe like 1% of the basketball players in college actually get into the NBA. So, I mean, with anything worth it, there's going to be a low success rate. But that doesn't mean you can't do it. Now let's actually get into some trading knowledge. So as I said, third part of this video is the basics of trading. So we'll start off with trading instruments. What exactly are trading instruments? Trading instruments are basically different assets or like things that we can actually trade. So we can see right here, we start off with trading instruments. We immediately see there's futures, stocks, forex, crypto, and options. So most of you watching this video probably already know what stocks are. You have, Apple, Nvidia, Microsoft, Tesla. Very simple trade. It's basically just, owning a piece of that company. Then you have forex, which stands for foreign exchange. So it's just trading two currencies from different countries. So for example, Euro USD is just the exchange rate between those. You can trade those movements. And then you have crypto, which is pretty popular as well. So if you know Bitcoin, Ethereum, XRP, that's what those are. And then you have options. Options has something underneath it like S&P 500, QQQ, Apple, etc., which is also very popular among day traders. But what we're going to focus on in this course, and I'll explain why as well, is futures. So there's 4 different types of futures you can trade. The first is equity index, which is what we're going to start on. So this is going to be things like the ES, the S&P 500, NQ, which is just the NASDAQ. So these are the 2 most commonly traded futures, and you guys will probably want to write that down: ES and NQ. And then we have YM, which is just US 30, and R2Y, Russell 2000. And kind of just explain what each of these are. The S&P 500 is like the top 500 US companies, and the NASDAQ is just all the stocks listed on the NASDAQ exchange. In this case, is actually just the top 100. For this, it's a set of 30 US stocks. And for the Russell 2000, it's just 2,000 smaller companies. And then we have commodities, so things like oil, gold, corn, gas, as well as interest rates. So 10-year notes, treasury bonds, you don't really need to know those, but they are things you can look into. And finally, currency futures. So Euro USD just stands for 6E. 6J is just the Japanese yen and US dollar. But again, main focus for this entire bootcamp is just trading the indexes, so ES and NQ. Now, I said that we are focusing on futures in this bootcamp, and you're probably wondering why. So I've let out this pro and con chart to make just everything simpler. So first, with stocks, right, the pros are pretty obvious. Liquid, you can access it very easily, and it's regulated by the SEC, so the US government. The cons, and this is kind of why I don't really day trade stocks, is first PDT rule, which essentially means you need $25,000 to be able to day trade. And that's like a lot of money to just, set aside to day trading, which most people starting off probably don't want to put that into an account. And another thing, which was worse in the past, it was actually a 2-day settlement, but now it's only a 1-day settlement. But basically what this means is, let's say you have $100 and you day trade with that $100 today. That means you have to wait until tomorrow to be able to day trade with that same $100. And before it was worse, because if you trade with that $100 today, you would have to wait for the day after tomorrow to be able to trade using that $100. So it's just basically restrictions on your trading, which is not great. And then you have options, which is good because it has high leverage, requires a low amount of capital, and your risk is also defined. But the cons, options can be great if you know what you're doing, but the reason why I really don't recommend to beginners is because of the complex risks. There's something called the Greeks, which I'm not going to get into, but one of them is time decay, which essentially says if you hold the option, that option value is going to lose if there's kind of like no movement in the underlying asset. So yeah, just in general, the learning curve is very hard. And again, you have that 1-day settlement. Now, these 3 assets, crypto, forex, and futures, they have unlimited trading. So that's good for us because then we can take as many trades as we want to within a day, which is obviously good for day trading. So first, crypto is highly volatile and it has 24/7 markets. But the cons is that there's low regulation crypto and there can be risk of manipulation, which is not good. And forex, also very popular among day traders. It's, you know, the most liquid trading instrument out there. $6 trillion of Forex is traded every single day, which is pretty crazy because if you don't really know Forex, I mean, you could not have guessed that. So it's very, very popular and very liquid to trade. And it runs 24 hours, 5 days of the week. Now, the cons, here is where it gets kind of sketchy and why I don't like it. So first, if you're trading with a broker, the regulation really varies broker to broker. There's no like one central exchange. Basically saying that if you're with one broker, they could give you, you know, a good price. And if you maybe go to some sketchy broker, they could give you a really bad price. But they could make money off something called spread costs, which is essentially meaning that if you buy in, you're instantly already at a loss. So not the best if you're trading, and kind of increases your risk. And it's also very news sensitive. So if you're trading, for example, the euro and US dollar, first you need to know the news between the euro and the United States. And then secondly, like if there's some news that happens like in, I don't know, like Australia or Japan, that news, even though it's not even directly related to the euro and US dollar, if that news comes out, that's going to impact the price of the euro USD. So while you're in a trade, I mean, you just need to be aware of all the different countries and their news. So kind of basically saying anything could happen at any time, and there's more countries involved, even though you're only trading like between two countries. And it does require high capital because the movements in Forex are small. You're going to make like what, 0.01%, maybe 0.1% in a day. Really the only way to make money is to apply a high amount of capital, and like 100,000 and make like 1% on that and make $1,000 because it doesn't move that much. Now, and I do have an asterisk, which I'll explain later. And now with futures, right? This is what we're focusing on in this bootcamp, and it's great because it's CFTC regulated. So again, monitored by the US government. Everyone gets the exact same prices when you're trading, which is great. High leverage, so you can make a lot of money. Well, this also means you can lose money quickly as well. It's liquid, one of the most liquid markets out there as well. A market is open 23 hours, 5 days a week. So you can trade pretty much any time of the day. Even if you have a full-time job, you can trade in the evenings. There's tax benefits, and there are very reputable prop firms that are on futures, which I'll also explain later in this video. Now, for the cons of futures, I mean, if you're undisciplined, you could take losses. And this is pretty much the same with all these. If you're just not disciplined, you're going to take losses. But with futures, it can punish you extra. And second, it also requires high capital. But again, the high capital problem is solved with prop firms, which I'll explain later in the video. So if we're trading futures, I mean, you probably want to know what it is. So futures are a standardized contract to be able to buy or sell an asset at a set price. And these are traded on regulated exchanges. So essentially setting a price for everybody. Best way to explain this, honestly, is the rice and farm example that it was first used or invented in Japan in the 1700s. So if you're a business that wanted rice, and you know that the farmers, they only harvest during the fall, how can you get that rice kind of in advance or know what kind of price you're going to be paying for it? Because you're going to probably be buying lots of rice. So this is where futures were invented. Essentially, what these farmers started doing is selling these redemption tickets, or the right to buy rice at a set price before those rice crops are harvested in the fall. So now these businesses have these futures, or these rice contracts, essentially tickets that they go and buy, and once harvest time comes, they can give that ticket to the farmer, and then the farmer will give them maybe like 100 bags of rice. So this is perfect because now they have a price that they can buy in advance and know kind of how much rice they're going to get. Now, the thing that makes these contracts interesting, these rice contracts, is that as time progresses throughout the year, so when it's before harvesting season, spring, summer, these rice contracts are going to fluctuate in price based on whether people want price or whether people think there's going to be a large or small amount of rice supply. And because of that movement, then we can trade off of that movement and, you know, buy if it's low and sell if it's high. But in terms of nowadays, if we're trading indexes like the S&P 500 futures, it's pretty much going to correlate directly with the S&P 500 index. So we don't really have to worry about what the actual price of the underlying asset is compared to its future. We can just trade the future itself. So again, futures contains an underlying asset. So these are the three most popular. We have ES, the S&P 500, and then NQ, which is the NASDAQ, and then GC, which is gold. So again, you're trading a contract, not the asset itself. But you don't need to worry about the price of the asset. You just can trade the contract nowadays, since it's pretty much going to move identical to the asset. And there's reasons why for that, but I'm not going to explain in this video. Now, what are some characteristics of futures? They're traded on a centralized exchange. So in this case, it's called the CME, the Chicago Mercantile Exchange. And it's highly liquid and transparent. And it has built-in leverage, which means you can make a lot of money and lose a lot of money pretty quickly. And you can go long or short very easily. Compared to like stocks, you need that $25,000 to be able to short, which is a hurdle. And there's also risks with shorting in stocks as well, such as having infinite losses. Again, not going to explain too much of that. And finally, the futures market is open 23 hours a day. So it's great whether you're trading in the normal time in the morning or if you're trading in the evening. So next, this is a very important chart, guys. So I want you guys to kind of know this like the back of your hand. And this will come with time. But first, in this chart, we can see there's a symbol. The main two you can probably focus on is ES and NQ. And they move in points. So in the S&P 500, we can see the point value is just 1. And how much is 1 point actually equal to? It's equal to $50. So if we move up 10 points in S&P 500, that means we make 10 times 50, which is $500. And next we have ticks. So ticks are simply just a fourth of a point value. So we can just divide point by 4 to get the tick amount. I personally like to use points because it keeps things a lot more simple. Just know 1 point is $50. But some people do like to talk in ticks as well, but it's completely up to you. Next, these two times are very important. So you're going to want to note these two. So for ETH hours, the futures runs actually from 6 p.m. to 5 p.m. So it starts Sunday at 6 p.m. and closes Monday at 5 p.m. That's considered one trading day. And it stands for ETH because it's electronic trading hours, basically saying it's trading for the entire day and overnight. And we can see it's the case for ES and NQ. And for RTH hours, this is called regular trading hours. So you need to know this as well. So this is kind of when the normal market hours are, which is 9:30 a.m. to 4 p.m. And that's when probably most people will be trading. I'm going to show you guys why futures are really simple and really powerful. And we're going to do this by actually looking at a ES and S&P 500 chart. So we can see here, and you don't need to know kind of any of this yet, but we can see off the bat, I mean, this is just one trading day. So we can see from 9:30 all the way to 4 p.m. close, it's moved from around 7,000 to 6,960, we'll say. And if I have this measuring tool and it's showing us that it dropped 40 points throughout the day, and this is telling us that our opportunity throughout this trading day is 50 points, or excuse me, 40 points times $50, because 1 point is $50, remember? Which means we have $2,000 of opportunity within this trading day. And guys, this is only on one contract, and one contract is basically like what we call shares in futures. If you have like 10 contracts, that's $20,000 of opportunity with just a few hours, which is absolutely insane. And then let's look at NQ, or the NASDAQ chart. If we measure from the 9:30 open all the way to the 4 p.m. and see this kind of range here, we can see we get 300 point drop. So it went from like 25,800 to 25,500. So if we do 300 points times the value of per point in NASDAQ, which we know is $20 from the chart, we can see it's $20 per point here. If we do $20 times 300 points, that's $6,000 of opportunity in one day. And this, again, this is only one contract. Imagine if you trade 10 contracts. this is a $60,000 potential move. And when we're trading, we don't have to catch this entire move. If we just want to make consistent income, we just need to capture a small piece of that move every single day. And that's boom, how we make our money. Now I'm going to talk about prop firms and funded accounts. So I mentioned those earlier as a solution to high capital. So trading requires money to make money. We all know that, right? So if we look at this example, if you only have $1,000 that you start off with on your own account too, if you make 1% on that, you're only making $10. Like that's not even lunch money. But how are we going to achieve $1,000 a day? So if we were trading on our original $1,000 that we put in, I mean, if we want to reach that, we're going to have to double our money, which is extremely risky because if you try to double it, you could also go to $0. And it's hard to do consistently. There's no way to double your money consistently. And if there was, then everyone would be like Elon Musk. What's the correct way to go about this? It's to make 1% a day on $100,000. Because if you do that, 1% on $100,000 is $1,000. Now it's much more reasonable to make 1% a day consistently than to try to double your money every single day. But now you're probably asking, where the heck can you get $100,000? I mean, like you and me, we probably just don't have 100K lying around that we want to put in trading and potentially risk. And this is where prop firms come in. So these futures prop firms give traders access to large amounts of capitals, up to millions of dollars, in exchange for following strict risk rules. So essentially what you're doing is trading the firm's money and you keep a percentage of the profit you make. So if you have like a $1 million account and you make 1% on that, that's $10,000. And then you keep 80-90% of the profit. So you keep $8,000, $9,000. So this is like the trading cheat code, especially like in this time, 2026, it allows everyday people like you and me to capitalize on tools that only professionals used to have access to in the past. So why do many full-time traders use prop firms? They do it because you can get access to like $50,000 and $300,000 accounts without risking your own personal money that you worked hard for. And right, this is only one account too. You can get like 10 300K accounts. That's $3 million in funding. And then second, there's defined risk. You're not really going to blow up an entire account. The prop firm is going to limit how much money you can lose. And this is great for building your trading skills and discipline because you're not risking your own money, which makes it easier on your psychology, and you're learning to trade in an environment where they give you rules that are essentially proper risk management. And it's going to let you scale much faster than a personal account because again, with that $1,000, if you try to turn that into 10K or 100K, you're going to have to 10X, 100X that. It's just not feasible. But instead, if you get a prop firm account and just pay a little bit of money, then you have access to all of this funding. You just make a 1%, 2% on that. And it's so much better and so much less risk. Now, yes, there is a catch with these funded accounts. You can lose the account by breaking rules. And most traders fail because they risk too much money. So in the case of funded accounts, being patient is much better than trading aggressively. So if you trade consistently and follow their rules, they're going to reward you like crazy. So how exactly do the prop firms work? So the first step is to buy an evaluation or known as a combine. Usually it's around $20 to $200. And essentially you trade on a simulated account and you have to hit certain profit target as well as meeting your risk rules. Those accounts can vary from $50,000 to $300,000. Second, once you pass the evaluation, then you actually move on to a funded account, trade real capital. And there's daily loss limits, more risk rules, and also some firms require consistency. And finally, after you trade on that funded account, then you can get a payout. And usually there's some profit split. So usually you keep around 80% to 100% of the profit you make, depends on the firm, and you can withdraw usually either daily or weekly. And if you trade really well in that funded account, then they actually move you to a live funded account and want you to scale up from there. Now, it is important to note that these prop firms are not giving you free money because you still need to be a good trader and trade on those accounts profitably. They're essentially renting you and just giving capital to you, and you kind of make money for them, if that makes sense. So Here on the right, you can see some popular futures prop firms. I think the main two popular ones are Topstep and Apex, and as well as what payouts would look like if you follow the prop firm rules and are consistent over a long period of time. So here are some common questions. First, how do prop firms make their money? They make them through first failed evaluations. So, most day traders fail. So the money they get from those evaluations, they just pocket. And then second, they copy trade the successful traders. And then third, for those successful traders, they'll put them on a live account and take a profit split from them as well. Another common question is that what happens if you lose a funded account? So it's no big deal. You don't owe the company or the prop firm any money. You can simply just buy another funded account, pass it, and continue taking payouts as normal. Now, this was only an introduction to prop firms. I'll probably have a video later down the line. No action you need to take right now, but in that later video, we're going to cover exactly how you can take advantage of these prop firms and trade them instead of personal money and be able to make massive amounts of profit from those. But if you already trade prop firms or plan to trade prop firms, I will actually leave one of the firms I use in the description of this video below with a discount code. The last part of this video is homework, which I really recommend you guys do. I want you guys to write down a profit goal of what you want to hit 1 year from now through trading. So is it going to be $5,000 a month, 10K a month, or even $100,000 a month? And write down why you're learning trading. So what is your sole reason that makes you want to actually learn this and make money from it as well? And finally, I want you guys to take notes on today's lessons, specifically on futures as well. And on day 2 of this bootcamp, we're going to learn more about reading candlestick charts and the TradingView app. So I'll see you guys next time.